comes to taxes, America is no Victoria's Secret model. A recent study showing out of 100 countries, we have the 94th most attractive tax system. That is below Mexico, Egypt, Japan, even below Zimbabwe. Not pretty. Two Americans for Tax Reform is Mattie Duppler and Tax Foundation President Scott Hodge on how to give ourselves a makeover. Mattie, why are we so tax unattractive?
Well, unfortunately, I could go on and on for days on why we're so unattractive, but there's a few basic points to be made. I mean, when you're measuring our tax code against other countries, the first thing really a lot of people look to is the corporate income tax rate. We now have the highest in the developed world, and part of that is because the United States has state corporate income tax rates that are added on top of our federal rate. So that brings us way above the OECD average and keeps people from investing in jobs and the economy.
So, Scott, listen, this has been kicked around a lot. I think even the casual observer knows that we have the highest corporate tax rates in America. It's low-hanging fruit. The Republicans are for it. The president has said he's for reducing corporate tax rates. What's the hang-up?
Well, I think it's a combination of things. One is leadership, and the White House has been talking a good game about lowering the corporate tax rate, but it's really put nothing forward that's formal in a real proposal and put all their energy behind it. In fact, he's committed a lot of demagoguery and beating up on big companies and so forth. In fact, the president's budget has a couple $100 billion worth of new taxes on businesses that do business abroad. And so he talks about lowering the corporate tax rate. At the same time, he proposes things that would raise their tax burden. That doesn't seem very consistent to me.
No, it doesn't. And Mattie, I mean, Dave Camp, who's the chairman of the House Ways and Means Committee, the birthplace of tax laws in America, he's going to do this big tax reform. I get nervous whenever Washington starts talking about massive tax reform. But then he turns right around and a couple of weeks ago says, I'm out. I'm retiring. Why was he making a big proposal and all of a sudden knowing that he was going to quit?
Well, the chairman did the hard work. He brought a lot of members in to talk about tax reform. And we forget, the last time we had a major overhaul of our tax code was over 2 decades ago. And we only have one remaining member from that class in Ways and Means still there. So there was a lot of education to be done, both within the Republican conference and Congress writ large. So he really did a nice job making sure that members understood what the principles of tax reform could be. But you're right, looking at the full draft, there are a lot of things that are left on the table. And one of the things about tax reform that makes you and I nervous and why it needs to be done as, you know, a huge project is because we don't have parity right now between the corporate income tax rate and business taxes that people who are paying on the personal side are subject to. So that's why we need to do a large package if we're looking to do something on tax reform. But you're right, it's very difficult and it's very expensive.
Yeah, and Scott, I know you're old enough to remember all the changes in the 80s. It seemed like every 2 years there was another big change in the tax code. And what I remember out of that was whenever Washington starts talking about, let's do a big revamp of the tax code, a lot of businesses say, we're not doing anything. We're not investing. We're not expanding. No capital spending until we figure out what the rules are.
Well, stability is a really important part of the tax code. And as you're right, Tom, there's been so much upheaval over the past few decades in our tax system, especially on the corporate side. It's very hard for businesses to project. And in fact, right now, Congress is considering what we call the package of extenders. This is 55 different provisions in the corporate tax code that lapse year after year after year, and Congress has to go back and renew them. And one of those is the very important research and development tax credit, which a lot of people attribute to higher research and development spending. And when you have that much uncertainty, then you get less of the things that we really want out of those tax provisions.
So, Mattie, if you're a betting woman, are you betting on any tax law changes in 2014?
Well, as Scott mentioned, tax extenders are really a big question mark hanging out there, and I think that we all have a lot of ideas as to how to fix those. But if we're talking about capital investment, we should stop penalizing investments, we should stop penalizing saving, and we should look at what we can do that allows people to keep jobs here and create wealth and prosperity. And right now our tax code doesn't do that.
Mattie Duppler, Scott Hodge, thank you both. Very